Robert Kiyosaki's last warning. Are you worried about the state of the economy and your financial future? Robert Kiyosaki, author of Rich Dad, Poor Dad, is here with a warning for all investors. With bubbles popping and the stock market crashing, he believes now is the time to start diversifying into alternative investments like Masterworks. In this video, we'll discuss the current state of the economy, inflationary concerns, and how Masterworks can help protect your capital from major losses. Tune in now to hear Robert Kiyosaki's last warning and how you can take advantage of this opportunity. With an eye to the future, Robert Kiyosaki has issued a warning for all of us about the current state of the economy, which could spell potential trouble ahead. Inflation rates are rising, bond prices are falling, crypto is down, stocks have declined, and the yield curve has inverted. This could be a sign that we're headed towards another recession. As people struggle to keep up with the changing economic landscape, Robert Kiyosaki offers advice on how to take advantage of the current climate and safeguard your finances. He also encourages us to consider alternative investing strategies that are not as susceptible to market volatility. When bubbles burst, prices usually fall rapidly as investors sell their assets to minimize losses. The effects of a bubble bursting can be felt across the entire economy, leading to rapid deflation, job losses, and reduced customer spending. In times like these, it is important to remember that while markets may fluctuate and bubbles can form and burst, smart investments will always stand the test of time. It pays off to stay informed and aware of any potential risks before making investment decisions. By doing so, you'll be prepared for whatever comes your way. The 2008 financial crisis serves as a cautionary tale for what can happen when a bubble bursts. It is widely considered the worst economic downturn since the Great Depression and began with the collapse of the Lehman Brothers in September 2008. The crisis was triggered by irresponsible lending practices, high levels of consumer debt, and an overinflated housing market. In addition, many corporations had too much leverage in their balance sheets due to lax regulatory oversight. As a result, investors lost faith in the markets and banks stopped lending, causing massive disruption across the global economy. This led to widespread job losses, foreclosures, and bankruptcies that continued through 2009 and beyond. While there have been several attempts to increase regulation and prevent another crisis from occurring, it's important to remember the 2008 financial crisis and take steps to protect yourself from any future market bubbles. The Fed has been gradually tightening monetary policy in order to curb inflation and reduce the risk of an economic downturn. By raising interest rates and reducing the amount of money available for lending, it is attempting to slow down economic growth. This could affect borrowing costs, making it more expensive for businesses to finance investments in new projects or expansion plans. Additionally, it could cause a decrease in consumer spending as people pay more for loans and mortgages. In the long term, this could lead to a slower economy with fewer jobs created and higher levels of unemployment across America. It is therefore important that the Fed action is carefully considered so as to not have unintended consequences on our fragile economy. A stock market crash could be especially hard on baby boomers, who are already in their retirement years. A market crash would create a significant loss of capital for them, making it incredibly difficult to maintain their current standard of living. Additionally, if the stocks that they rely on for income and value drop significantly, this could cause further financial strain. This is why Robert Kiyosaki's last warning is so important. As he mentions, inflation rates are rising and bond prices are falling, factors that suggest a recession may be looming. As such, it's more important than ever to take preventative measures against an economic downturn. By diversifying investments into alternative asset classes like art and crypto, investors can minimize the risk of losing too much money and instead find a more secure form of income. In summary, baby boomers need to be especially careful in the current market climate and take steps to protect their capital from the potential for a stock market crash. In conclusion, Robert Kiyosaki's last warning is for us to be prepared for a potential recession and revolution. He encourages everyone to take proactive steps to protect themselves and their financial future. We should all look into diversifying our investment portfolios with alternative asset classes, such as commodities or art. But it is always important to do thorough research before investing. It is also wise to keep some liquid funds aside in times of uncertainty so that we can make ends meet during an economic downturn. With these proactive steps, we can better prepare ourselves for any kind of financial crisis. Drop a thumbs up if you liked the video, and don't forget to subscribe and hit the bell icon for more interesting content. Thanks for watching.